Order submitted. Order filled.
Hey, what's up, everyone? DayTraderRockStar here with you, and hey, it's my mug. I'm messing around with some software with the camera. The lighting's not that great. I'm at my house. I even have a background on, so I'm testing out the VCam and seeing if I can use that at the office and stuff. But anyway, just went long here actually, and I wanted to get on tonight and just do a little talk with you guys. Hopefully catches you at the right time. I guess you could listen to this anytime you want, but catches me at the right time. It's about 10:35 p.m. here, and taking care of business. And usually at nighttime, I don't get to check out the market later until the evening. And I noticed today there was some really good setups, and I noticed a lot of my friends who trade texting back and forth. Tight Stops is out there trading. Anthony, I see Jordan, J-Dub, and everyone kind of trading out there. And the volatility in this market it enables you to actually trade successfully overnight. You have the moves overnight. So I want to kind of discuss and kind of just have a good talk with you tonight. Not long, just enough to kind of get a couple points across. What we're here for. We're here to trade, right? We're here to trade, here to make money. There's a lot that goes in with this, a lot of emotional baggage we carry into trading. I'm an expert on this, because I've been in the markets for so long. I carried some of that baggage. I continue to deal with it. I feel like, trading, you have to have your own AA meeting, because there's so much out there. It's such a tense and, nerve-wracking situation, especially this type of trading. I mean, investing, that long-term investing, that's not as stressful as intraday, and we're going to be talking about intraday, making money, income, each and every day in the markets, and that becomes, a little bit more difficult, a little bit more stressful, and we're going to talk about dealing with that. So, as you can see, just messing around here overnight. But today, just like every other day, and I have to stress this, and I want to get on here. I said, I'm going to feel good. Maybe I should have a drink. And I said, nah, you know what? I'm just going to get out here and really just talk about it passionately, about how well these setups are. When we're trading and the style I'm trading, and this is really what I'm promoting right now, is just kind of talking about my trading style. And if you're trying to learn that and you're joining us each day at Day Trading Radio, where I trade this way, this is done real time, live. So I'm making these calls real time, and I think that's really important because when we make the call and take the entry, it's because a certain thing sets up for me. It's my business plan. I refer to it as a business plan. I want to make sure that everyone understands that coming to work each day is not a game or a casino or anything like that, but it's a business. Your job is to make money, and how do you make money? You go to your business plan. You should have a method of making money in the market. You should have a strategy. How do you trade, especially short-term traders? Are you a scalper? Do you trade breakouts? Do you trade moving averages? Are you a crossover, moving average trader? You could RSI. There's so many different things, that you could be focused on and trade. And I've learned over the years, and I've tried them all. I have to say I tried them all, and learned that only a few really are, good for me. And very, very, very good, and being able to refine those over the years and being passionate now to see it's almost to a point where I said, and I had so many people say this to me. He says, well, why don't you just lock yourself in the cellar and just trade the system, and just, be like that. And I don't know. You know what? It's a community that we have here at Day Trading Radio. I love trading. I love teaching. And I love people being successful and happy. And I think that's just part of life. You just can't lock yourself in the basement and trade. You gotta teach people. But the other things that come into is, what if everyone knows the same great technique? Does that kind of counteract it? And these are questions we have to kind of see. But I believe that the liquidity in these markets that we trade, we're going for the small cheese here. So we're able to get the crumbs of the market when the markets are running. And that's all I want. I just want to make a good living trading and teach a way of. I'm a teacher. I like teaching this. I like explaining it. I was always into charts growing up. I got into technical analysis probably back in 97, 98, just the beginning of I started in 96, but it learned that way, when a lot of people learn to get involved in chat rooms more message boards and forums, and there's a lot of different things that you could get mixed up in. That was back in the day with the So's Bandits, and it was a different time. It was kind of like the Wild West of the markets. You could do a lot. You traded in fractions and stuff. And as the market, continued to, and there was a lot of day traders in the market. And then we had the tech bubble. And we go through all those things. I'm not even going to get sidetracked. I don't want this that long. But that's my history comes from back then. So, now I am so passionate about this one setup, and I'm watching it at night. And let's just go back to today, and I'm just going to explain the setup, and this is kind of a pep talk, meaning you have to get your shit together. If you're serious about trading, I am absolutely positive that I am showing you probably the best technique in trading. Technique, call it strategy and methodology. But there's a lot to go with this. It's just not cut and dry. There's an experience factor that comes along with trading, understanding trends, understanding market sentiment. Those two things right there, the overall trend of the market, the sentiment of the market, the bearish bullishness of the market, play a big part on understanding how much of the profits you want. You could be in a good position and not be able to take your profits fast enough and end up being in a losing position. And and that's really that's the key right there. That's the key. And just recently, I would say just within the last year, I've focused more on taking profits faster, just based off one indicator. I said, what? If the market's trending down or very choppy, what I'm going to do is take my profits after the first rotation of my fastest stochastic indicator. And to get to that more on other videos. Again, this more of is a pep talk for those who understand my type of trading. If you are familiar with it, that's great. If you would love to learn more about it, reach out to me at DayTraderRadio.com. I do a show there each day from 8 o'clock to 4 o'clock. Afternoon Eastern Standard Time when we trade the markets. We have hundreds of traders. We have a beautiful chat room. We have experienced traders. And I'm very proud of my, forum, our chat room. I should call it not even mine. It's our chat room. It's a family of traders, and I'm very proud of those family of traders because a lot of them have great experience, as much experience as I have, and different things going on. And we all work together as a team, and I couldn't, and it's just really great to go to work each day. All right, so here's that trade. And what I see right here, the reason I got in here is because we had a divergence, and that's the key here. And if even at night, and this is only 2 contracts, right? I could take that off, and I probably should have taken it off before. And I didn't take. It's already started to pull back, but I wasn't really paying attention to it. But we were up more before. I just wanted to go back. I didn't want to just leave it hang out there. I don't want to get sidetracked either. But, just great traders there. So today, we came into the markets. Let me scroll back. And being a Monday, I said, you know what? We're going to do the best we can. We're going to point out this, for me, being the broadcaster, very hard to be 100% focused on my trade setups. It's just because I'm taking questions from the room. We're looking at all different things. We're traders, so we're all looking. If I was a focused trader, and I want to do this so bad, and that's what maybe I'm talking about it. Maybe I'm trying to convince myself to do this a little bit more in the evening. I had some people contact me from Europe. They said, John, we would like to, trade the hours over here, and a few people. And I said, well, it's very hard for me to focus. Like I would get up at 3 o'clock in the morning. I think that was a good time to start. The 8 o'clock, 9 o'clock time normally isn't that good, but as you're going to see now, we're starting to see action. And so anyway, this is just a recap of the day. And I think it was pretty focused today. It doesn't make for an exciting show, but you let me know. Do you want an exciting show, or do you want just straight up, quiet? There's a setup, approach in, take the entry, take the exit, move on, no fun, boring old Johnny. Or do we want our Jeopardy? Let me know. I'd love to get some comments on this video. Do you like your Jeopardy or no? Is that a waste of time? Do you like us talking, having some guests on? We have a different type of show here, we have a different type of show. It's not going to be a professional show. We have some interesting guests that come on and give us some really good, colorful words of the market. Anyway, getting sidetracked again. So notice that this was a 14.3 divergence, and divergence said, John, this low is not lower than this low. How could that be a divergence? Well, there's three types of divergences I work with. A pure divergence, where you have a low and a lower low and a low and a higher low. Kind of a double bottom divergence, where the low and the low meet. And then we have what we call a relative divergence, where most of the level is in the same area. Well, it's actually four, but the stochastics definitely show a change. And when I say a change, like it's not acting like the stock. The stock could come back down here, but the stochastics, especially in the 14.3, haven't retraced back to where it should be relative to where the price came back relative to the previous price. So when you see all these things, and this takes years and years of understanding, but this is a great divergence right here. So at that point I said, you know what, that's a good divergence. And I got in a little late, but as you can see, when we point out these divergences, look at the moves in the market. I mean, this moved all the way up. And then it actually gave us, and I remember calling this one too. I didn't mark it out though. I did not mark this off. But we did call this divergence right here. This was a nice sell side divergence. And this is kind of almost like what we call a running divergence. Another term you might hear is where you have a series of 1, 2, 3 highs. All right, 3 pops to a top, we call it. George Lane kind of coined that. And again, not everyone's going to recognize that, but this is a textbook example of the three pops to a top technique that George Lane uses. George Lane, the father of stochastics. Look him up. You'll find that his stuff is amazing. So that's my history. That's my sifu. And as you can see right here, this was 11 o'clock, 11:10. I don't know what I was doing at that point, but this was a textbook, absolutely fantastic. If you don't take it, I'm going to smack you on the side of the head type of trade. All right, that's the trade you want to take right there. And from that point on, and these are big ranges. Not to say you're going to get the bottom here, but say you get 90 on this. This still goes up 10 points. Easy. And I'm, taking, and again, I'm not going into detail on trading futures. This is the micro contract. You have the ES, which is the futures contract. But with the micro contract, and to put things in perspective, all right, let's put it into perspective. If you go to a discount broker, like I use NinjaTrader for some of my stuff, Interactive Brokers, but there's some that are cheaper than others. Like Interactive Brokers, you have to pay an arm and a leg for futures contracts. NinjaTrader, for an MES contract, it's $50 a contract. So 2 contracts, you're really just putting up, it's $100 you're putting up in margin, and you're able to make that in one trade right back. I mean, the way this market moves, not to say you do it, but on average, on a divergence like this, trading just 1 to 2 contracts on average. What my goal is, and I'm showing you the basic benchmark, saying if I could do it with 1 or 2 contracts, make $100. My goal is always try to get over that $100 mark for the day, just on 1 or 2 contracts per trade. Then you could do it with 10 or 20 contracts, and you could be making it. It's a matter of understanding that what your risk is, how much money you have to work. But like I said, I'm showing you with minimum amounts. All right. It's a little easier for me doing the show. I'm not that concerned in pulling my hair out and scratching my beard. You like my beard, by the way? It's like getting kind of grayish here. My hair is like fine, but my beard is turned gray. But it's kind of a cool gray. I might shave it off though. But It's kind of distinguished. Anyway, so then the market popped up here, and we came back down here, and I said, you know what? Fool me once, you're not going to, fool me twice. Here we go. Here we got a kind of a running divergence again. 3 drops to a pop this time. 3 drops. We had 3 pops to a top, 3 drops to a pop. 3 pops to a drop, 3 drops to a pop. Not the easiest thing to recognize. You'll always go with the first low. The second low gets canceled out. It's about the third low. If the third low is above the first low, even though it's below the second low, it doesn't really matter as long as it's above the first low. With a reversal candle, actually I took it on this one anyway, but with a reversal candle, this was a great one. I took it on this one. We took a fast profit on it, real fast. Because I just, it popped really aggressively, and I expected to turn back. If we looked at the other chart I had, I believe the VWAP was running through this level too, so I was trading into the VWAP. Then it set up again. This was even a better divergence. I didn't take that one. And look at the move it made. Then we had a textbook sell-side divergence. Talk about just the setups today. And you can't misidentify this. You're looking at a... You're looking at a perfect specimen there. That's the perfect black rhino. You're not calling it a chicken or a dog. It's definitely had the characteristics of a black rhino. Has the long, whatever that is. You could use anything. I'm trying to make a funny analogy. I don't know if that was even, but if it looks like it, and it is, there's no distinguishing something other than it because it's a divergence. Our rule is high, higher high, high, lower high. All right. That's the only time it happens. Only time it happened here. Boom. Only time it happened here. Boom. Only time it happened here. Boom. Only time it happened here. Smack. All right. So look at this. All right. Comes right back down and boom, here's a divergence. At this point, it's 12:30. I'm at lunch at this point. I remember because I needed that break. I was exhausted. So, came back and said, all right, we missed that one. It wasn't giving us that one, but it would have gotten us in. It would have given us 5-6 points. I think I was in the middle of telling you what I'm looking for a trade, and basically I'm doing 1-2 contracts. Tomorrow I think I'm just gonna, if I see the setups like today was a perfect day for divergences. It was sideways, it wasn't a trending market. This is the type of market you have to step up to. When you see a strong trending market, you have to understand that, and you can't expect both sides of the trade to be so good. It's going to always be one side or the other is going to be better. Same thing with the tradeometer. It's a great tool. Lots of times in trending markets, you're not going to have the setup on one side of the market, meaning if it's trending strong, up, high, bullish, your shorts are going to probably not end up giving you a big return or a return that you're expecting, or maybe not even. You might get run over. It depends on how strong. And that's your job to recognize that trend. You have to recognize that, and then you understand that, and then you could apply your techniques and say, all right, I'm not going to try to short this market. It is trending. What are my keys to trending markets? Well, we learn about that. These are the things that we learn over time. This is things that I teach. Each day. If you're on the site and there is something you need to know, just ask me. All right, just ask. There is important trend identifiers and stuff, moving averages. So market here comes back, and you can see the chop here. It's back and forth. Now it's kind of choppy, and there's kind of a bigger pattern here. And I love patterns. I love just give me a nice downward little move and give me a wedge pattern like this, and give me a wedge pattern and give me this divergence every single time. Now, looking back out here, this is 1 o'clock. I was still at lunch. That's the reason I missed these two. But this, I realized when I came back, I said this was the best setup. This was a falling wedge divergence with a reversal candle and a higher low. The higher low here was so high that you can't even tell it turned down on this low, right? You don't see that, can you? Let me see if I can bring a marker up here, across here. All right, so right here, this candle right here, you see it just kind of flattened out on the 9-3 right there. Flattened out on this one, never really turned. This turned back a little, and there's a lot of things I'm not even talking about here. One of the main things is the the 60 period down here. I call it the 60 period. It goes back 60 bar candles, or whatever period you're at. So 60 period stochastics. Once that it's in an oversold level, heading up, you're going to have a better chance of an overall bigger rally. Man, this was a great setup. Man, that was a good setup. So there it is, another move, and then at 1 o'clock we had what we call a bull flag, and we had a bull flag. We had a fast pop, and I took profits right away. And then it was really choppy there, and eventually started to pattern out again. I'll use that term, pattern out. It's when we start to understand the channel, how wide the channel is. It's given us a nice little channel, and I love channels because here at this point, I remember watching this. I said, this is a good spot right here. We have a series of candles right on the 50 period moving average, and we're not really breaking down there. We kind of have this different type of divergence. It's a kind of a weirder divergence. It's called a mid-pattern divergence, where it doesn't get under the 20 and bounce and then come hold above 20, but it gets down low above the 20 and then bounces above the 20, but gives us that little divergence higher low on the 9-3. Combined with the two candlesticks and the lower trend line, it just, that was a good spot, and that was worth taking. That in the business plan, that is something. And again, this is from our business plan. I already have the business plan. You have it. As a member, you have the business plan. It tells you what trades to take. What's the criteria? Can I bring it up here and show it to you fast? I don't even know if I could find it. I show it to you guys all the time. It's not like I'm just saying it's important for you to have your own business plan. And for me, a business plan like this, let me see if I can get it up on the screen without my computer crashing. I'm at my house, and sometimes I have a problem with this computer if I open up too many things. I have a broadcast going on. I have a lot of things going on right now, so I'm like hoping for the best. Cancel that. Are you sure you want to cancel? Yes. All right. This is the business plan, and again, everyone should have a business plan. Voila. It's taken a while. You can tell my computer is like really grinding out here. This break is brought to you by 100% recycled Coca-Cola. All right, I'm just going to jump down to look at that, trading for daily income, 8 a.m. to 4 p.m. We're going to go down to, this is part, I would say, very simple. Part one of the divergence, especially in the wedge pattern. See, it's all written down. For me, I have to write it down because it's just like going to a casino. If you're in a casino and you believe in, maybe odds or better strategies, you go to the games that are going to give you the best, the best odds. That blackjack or poker or some other one of those Chinese games. The ones that have really good odds, especially if you're talking about blackjack, we're almost counting cards at this point. So I mean, I love the blackjack. I love game theory too. So I mark it all down for me. I say, now I'm down to a point where I'm trying to teach these things in different type of divergences, the 1-star, 2-star, and 3-star divergence. At a 3-star divergence, you better be in there. You better have the biggest position you have on that you want to take. Now, and again, this is all part of the strategy. You could calculate all, if you need to calculate how much of a position you need to know, you need our calculator here. And it's an easy calculator to use. You just input it into a spreadsheet. It'll tell you from how much money you're using, how many contracts you should get, and what your risk should be. It's called the, it's just I don't have it on this thing. It's in our forum. Oh, here it is. So, again, this is based off of, probably when I did using this, I was using it for the ES. But this is the position sizing calculator for divergence methodologies. All right. And then I just want to show you one more thing. You know what? That's enough of that. Let's just kill that. You can find all this at Day Trading Radio. I want to go back here. And this kind of go back and say how important it is to take these trades. Now you know, you see it working. In hindsight, you see how great they are. So, I mean, now the object is to be in front of this when it's happening. Now, not everyone can be in this position, right? Not everyone's able to, oh, you know what, I want to sit in front of the computer 5 days a week and wait for these along with Johnny. You know, so how do you capitalize on this? They said, John, I do see what you're talking about. This is the best thing I've ever seen. You know, please, I want to learn this. Well, yeah, you got to put the time in. That's the thing we haven't figured out. I do send out alerts, but these things happen so fast. Unless there's a daily divergence, which goes out, the 1 minute divergences. By the time you send out alerts, maybe I could do text alerts. Maybe we do it in the chat room. I'm on the radio. It doesn't get any faster than that, right? So you just got to listen to it on the radio, and we do it live. I tell you, this is the best thing. It's the best, Prove me out there. Someone prove me there's a better way of trading. And again, it's not as easy as it seems because it takes a lot of time, and there's a learning curve. And there's a lot of little things, ins and outs, tips that you should know. What kind of divergences, 3-star divergence versus 1-star divergence, what makes that? I have a set of indicators that confirms that. Three different candles to look for. All things I added to it to make the situation easier. Now you just gotta be in front of it, identify it, and take it. All right. So this is the overnight. 6 o'clock market opened up. Again, market was kind of grinding up. I'm just looking at, and look at this. All of a sudden, coming into 10 o'clock, 8 o'clock, coming into 8 o'clock, the market starts to get a little whippy. And this is the environment we want. Here we go. Can anybody name this? I see one right now. And again, I'm probably upstairs at this time, putting the kids somewhere or something, screaming at someone. But here we have what I call relative divergence. And this is really a low, and it's a closing price divergence too. All right, it's both. I would even say it's more of a closing price. So you see these bodies, the red body, the green body. The lower line is the closing price on these. If it's red, if it's green, but it's it's just the body, the body close, and they're equal. This candle is a little bit lower, but it's really the closing price is very equal to where, it's almost a double bottom. But look at this. Look at this here. Look at how steep this is. And when we talk about steepness, this is also important. Another key here, it's the angle of degrees that this line is. So if this is 0 and this is 45, 90, this could be 10, whatever the angle is. The higher the angle, the better the divergence. This is almost like maybe a 30, 40 degree angle here going into. Normally I'll take these if they're over 10 degrees. 40, this is a real strong one. And as you can see, big powerful move comes from that. And this is overnight. Seeing that at that point, it's trading at 04. 04, it went up to 09. So it did about 5. It's not as big. The move's not as big as it would be during the day, where this could give you 10 to 20 points. But that, like I said, I don't think there's a problem getting in at 04. And if you're just looking for a few points, 3 to 4 points, you got them. You could get those. Anyway, here was another perfect divergence here. This is right now, I think you could have made a lot of money tonight if you're, and you know what? These guys are making money, like Tight Stops. I keep on getting the text. He's trading divergences tonight. He is. He's trading divergences tonight. I was going to get my phone and tell you what he's on. But here's another one. Here's another one. You see these lows here? These 2 candle lows right there? We call that a kind of that little tweezer area. Look at that second low here, and look at the level right up here. How that's where the stochastics were. It never really even turned down. It just continued to move higher. That's extremely bullish. Very hard to see because you're always looking for that dip and that move higher. So this candle out of nowhere sneaks down, reverses, and boom, it's gone. And then I sat back, came down here, setting up. I said, oh, let me get into this. This is a fast little divergence. And that was one that I could see. A little relative divergence between this one, and the closing prices, and the higher low. And I said, let me get in. And then I was talking, and I got out. And I take fast rotation moves now. Like I said, see what happened here? See that 9.3 got over 80? I said, you know what? Thank you very much. May I have another? It's like picking up $20 bills on the street. Every single setup. Now, this is where we are right now. Oh, this was another one I took tonight. Oh, yeah, I took a few of these. This was the last one we just took when I got online on the air here. I had more on this one. It came back down because I caught the highs, and it took me out on the tip, so I wasn't really paying attention. We would have had a much better profit on this one. And this is where we are right now. The $4. That's not counting the other trades because it resets itself at 8 o'clock. So I haven't done much today on just a couple contracts here. Didn't really add up to much, but I wanted to really just show you the divergences today and show you all the divergences tonight that are setting up. I took that one right there, and you can see a nice move up. Now this is minimum contracts. You have 10 contracts on, you're making a lot more money. All right, you can put 20 contracts on. I don't, put 100 contracts on. Not at night though, but during the day you get these good setups. Always have a stop under the divergence low, and you're good to go. All right, I just wanted to get that out there, touch base. Give you something to think about and get inspired by. Understand there's a way to making money. There's a couple things you need to do to prepare yourself. You need to open up that account. These are things you need to do. Prove yourself. I always tell people, come, John, please, teach me how to trade. All right, do you have an account? No. I said, why don't you go open an account, put some money in it. Then we'll get you, sim trading a little, and then we could, work on it. But until you take the step and open up an account. It's you have to take that step. A lot of people don't even take that step. So prove it to yourself you really want to do it. You'll sleep, eat, and some other things trading once you start trading. And it's not for everyone. It's definitely not for everyone. And there could be bad beats too. Not to say this is always going to work out. There could be news that turns the market over fast. You could be in a bad position and it gets caught. That does happen. But as long as you have your stop in place, which your stop is part of the business plan. You gotta have a stop. It's a business plan. It's your business. All right, I'm done for tonight. I hope you guys though you can leave me a comment on this one because I showed my mug. I really showed you some great stuff here, and you know what? I'm going to send this out into the universe with 2 thumbs up. All right, I'll see you guys in the market tomorrow. It's just about 6-7 hours away. gotta get some sleep now. Good night.